The GECF Annual Short-Term Gas Market Report 2021 is one of GECF's flagship publications and the second public edition. The report provides a retrospective analysis and current state of the gas industry until September 2021, as well as short-term forecasts for the full year 2021 and 2022. The title of this year's report is Road to Recovery from COVID-19 and Transition to a Carbon-Neutral World. Dawn of a New Era for Natural Gas. Following the recession in 2020, when the global economy shrank by 3.2%, the world economy in 2021 seems healthier, with global GDP headed to grow by 5.9%. In 2022, the global economy is forecasted to continue expanding at a healthy pace of 4.9%. This recovery is driven by wide vaccine rollout, particularly in advanced economies, fiscal and monetary stimulus, easing COVID-19 restrictions, and resurgent international trade. However, the turnaround remains uneven and unsynchronized due to the disparities in vaccination, access to financial support, supply chain bottlenecks and rising inflation. In 2020, global natural gas consumption declined by 2%, driven by the COVID-19 restrictions and a mild winter. Natural gas consumption is estimated to rebound by 3% in 2021, driven by improving economic and industrial activity, extreme weather and easing COVID-19 restrictions. Further growth is forecasted in 2022 at a slower pace of 1.4% to 1.8%, considering the removal of most COVID-19 restrictions and coal-to-gas switching policies in several countries. The extension of the natural gas grid in China and India and new and emerging players in South and Southeast Asia will also boost consumption. Global natural gas production fell by 3% in 2020 in all regions except the Middle East, and was due to weak demand for natural gas and low oil and natural gas prices. The US experienced the sharpest decline, while China, Iran and Azerbaijan recorded an increase. For 2021, the strong rebound in natural gas prices and demand supports the robust recovery in production. As such, global natural gas production is forecasted to recover to the pre-pandemic level in 2021 and will continue to grow by 4% in 2022, driven by Russia, the US and China. Natural gas storage in the EU were at a record high for most of 2020 due to the weak natural gas demand and strong LNG supply. Fast forward to 2021, the level of natural gas in storage has been at an abnormally low level and has put strong upward pressure on hub prices. The pace of replenishing natural gas in storage in 2021 lagged behind the previous years due to high prices, stronger natural gas demand, weaker LNG imports, and supply disruptions in pipeline gas supply. Global net pipeline gas exports, which is dominated by GECF member countries, declined by 4% in 2020, particularly in Europe. However, between January and September 2021, higher natural gas demand, lower inventories and weaker LNG imports boosted EU's pipeline gas imports by 13% year-on-year to 204 BCM, but was lower than the 2019 level. In the short term, global pipeline gas trade is expected to rise consistently and is supported by the completion of 150 BCM per annum new pipeline gas export capacity from GECF member countries destined to Europe and China. Global LNG supply remained resilient in 2020 and grew by 1.4%, with the GECF as the dominant supplier. From January to September 2021, global LNG imports jumped by 6% to 282 million tonnes, driven by Asia and Latin America, which offset a decline in Europe. In 2021 and 2022, global LNG exports are forecasted to rebound by 6.5% and 5 to 6% respectively. The recovery in exports is supported by the start-up and ramp-up of new LNG projects, recovery in lost LNG supply, improving feed gas availability and lower maintenance activity, particularly from the US and GECF member countries. In terms of FIDs on new LNG export projects, around 170 MTPA of LNG capacity were postponed in 2020, mainly from the US, while only one small project took FID in 2020. Almost 50 MTPA of LNG capacity reached FID until September 2021, mainly from GECF member countries. In the short term, almost 180 MTPA of new LNG export capacity are targeting FID, with 63% of the projects in the US and 10% in GECF member countries, which could be supported by improving market conditions and healthy outlook for LNG demand. Carbon-neutral LNG refers to cargoes in which the greenhouse gas emissions are offset through the purchase of carbon credits. At least 28 carbon-neutral LNG cargoes have been traded since July 2019, mainly with buyers in Northeast Asia, which is less than 1% of global LNG trade. Across the LNG value chain, the downstream segment accounts for around 75% of the total greenhouse gas emissions. The average cost of carbon offset for a standard-sized cargo in 2021 is around US $1 million, which is equivalent to US 30 cents MMBTU. Gas and LNG spot prices have shown extreme volatility, oscillating from unprecedented lows of below $2 MMBTU in 2020 and skyrocketed by more than 300% in 2021 to peaks above $40 MMBTU in 2021. On the other hand, oil index prices have proven their stability, predictability and competitiveness over spot prices. In 2021, the surge in spot prices was driven by a strong rebound in natural gas demand, high EU carbon prices, low storage levels, slower recovery in pipeline gas supply, and supply disruptions at some gas and LNG facilities. The GECF strongly believes in the future of natural gas and the key role it will play in achieving the UN Sustainable Development Goals and the transition to a low-carbon future. Furthermore, the GECF member countries are in strong support of long-term oil-indexed contracts to support investment, stability and competitiveness in the gas industry, and are committed to their long-term partnership with buyers for the sustainable supply of natural gas.